truth is, most traders don't need another strategy. What they need is a process. So in this video, I'm going to show you 4 habits that profitable traders consistently follow. These are not flashy tricks or secret indicators. What they are simple principles that will completely change the way you approach the market. So let's start with the first one. Stop fighting the market. One of the fastest ways to destroy your account is by trying to predict reversals. The price is moving up and the market is making higher highs and higher lows. All signs are pointing bullish. But sometimes we try to convince ourselves that the market has gone too far and then we start looking for sells. Does that sound familiar? The problem is that trends can continue much longer than most people expect. Instead of trying to pick tops and bottoms, focus on identifying the current direction of the market. Ask yourself, is it bullish or is it bearish? If buyers are clearly in control, look for buying opportunities. And if sellers are clearly in control, look for selling opportunities. You shouldn't be predicting when the market will turn. Your job is to recognize what's already happening and position yourself accordingly. Now don't get me wrong, a trend won't guarantee a winning trade, but it will most definitely dramatically improve your odds. Number 2, find areas that matter. Once you've identified a trend, the next step is knowing where you want to trade. Most beginners open charts and immediately start looking for entries. Professionals do the opposite. They first identify locations where price is likely to react. Think about it this way. Not every price level matters, but certain areas have historically attracted strong buying or selling pressure. These are the zones where larger market participants often leave their footprint. Maybe it's a previous support level or a resistance level, or maybe it's a supply and demand zone. Whatever method you use, the goal is the same. Identify the areas where price has shown meaningful reactions in the past, and then wait. You don't need to trade every candle. You don't need to chase every move. Sometimes the best trade is the one that you don't take. If price never reaches your area, it's okay. There will always be another opportunity. You don't have to rush. Number 3, think like a risk manager. Most traders focus on how much they can make, but professional traders focus on how much they can lose. That mindset shift changes everything. Before entering a trade, always ask yourself one question. If this trade loses, am I comfortable with that loss? Because losing is part of trading. You will lose money at some point. It's unavoidable. Even the best traders in the world, traders have been trading for years, even they lose money. So it's part of it. The key here is that they make sure one loss doesn't destroy weeks or months of progress. Instead of risking a huge percentage of your account on one idea, keep your risk small and consistent. A trader risking 1% per trade can survive a long losing streak. A trader losing 20% per trade might not. Trading isn't a sprint, it's a marathon. You absolutely have to focus on your account survival. Number 4, always track your performance. Because most traders don't. They win a trade, they celebrate, and then they move on. They lose a trade, they get frustrated, and then they move on. And in some cases, they even quit. Nothing gets learned, nothing improves. Every trade contains information. Why did you enter? Did you follow your rules? Was your analysis correct? Did your feelings influence your decision? These questions matter. Because if you track your performance, you'll notice patterns start to emerge. You might discover that your best trades happen during certain market conditions. Or maybe you'll notice that most of your losses come from breaking your own rules. Either way, the data gives you valuable information. Feedback. And feedback is what allows improvement. Now, this is where a lot of traders get stuck. A lot of beginners spend years looking for that perfect strategy, the perfect indicator, the perfect setup. But profitability rarely comes from finding something new. It usually comes from executing the basics consistently. Following the trend, waiting for quality areas, managing risks, reviewing your performance. Now, none of these are exciting. None of them will make for flashy social media posts. But these are the habits that build consistency. And consistency is what ultimately creates profitable traders. Because if you can master those 4 things, you'll already be doing more than most traders in the market. And that is often when real progress begins. So if you're struggling right now, don't make the mistake of thinking you need another indicator or another strategy. Just take a look at your process first. If you found this video helpful, subscribe to Trading Uncovered for more beginner-friendly lessons. I'll see you in the next video.